Good. Okay, well, welcome everyone. My name is Paul Chatterton. I lead the Landscape Finance Lab for the conservation organisation WWF. I'm based in Vienna, Austria. I'm a really big fan of Commonland and very privileged to be with you here to launch this new report. So the report is called Calculating the Value of the Four Returns of Large-Scale Holistic Landscape Restoration. I won't read out the subtitle, that's even longer. But this is a really important and unique report. There's a lot of reports out there in the Twitter sphere, in the LinkedIn sphere. Why would you bother with this one? Let me give you a couple of reasons. The world is run through projects today, whether business projects, conservation projects. These are short-term, they're disconnected, they're competitive, and they're the reason why we fail to achieve long-term protection of nature and to integrate production for sustainability. Landscapes, so projects are the problem, landscapes are the answer. But we haven't had the numbers yet to prove that landscapes really work. And that's where this report comes in. It sketches out for the first time the radical proposition that landscapes can bring practical benefits equally for society, for economy, and for ecology. It uses a case from the Altiplano region of Spain that's been building for 7 years, 1 million hectares, tens of thousands of people, real lives, real land, and most importantly, we're getting towards some real numbers. So this is quite unique. I'm not aware of another report like this that really starts to quantify the evidence of the landscape approach, and we're all very firm believers that the landscape approach is a way to achieve integration of the SDGs at scale. So we have 5 speakers today, and for each of them, this is a very personal story. For Willem Ferreira, who is the CEO of Commonland, he'll set the scene. This is why he established Commonland in 2013, to prove that this is possible and to ignite the world with this. We'll hear more from him. Jasper Bertels, the landscape finance expert for Commonland, will take us through the report. He moved from the finance industry to Commonland exactly for this, to be able to test how to create an integrated approach to dealing with nature and economy. We'll then hear reflections from 2 luminaries of the finance industry, Charly Kleissner and Celine van Asselt. And it's a real privilege to have both of them. Charly's been making a very personal appeal for a very long time for impact investing and for changing the entire finance industry to be much more aligned to this sort of thinking. And Celine's been a long-term supporter of Commonland. She now sits at the very top of the food chain of the finance industry in the pension and asset management world. So we'll hear from them as commentators on the report. Then it's your turn with questions and suggestions, and feel free as we go along. There's a question and answer function for Zoom that if you poke around, you'll find that. It's different to the chat box, so feel free to add your questions in as we go along. And we'll close with final observations from Spain, from the landscape itself, delivered by Astrid Varga of Albalal. And I think that's only fitting. And this only works if it works for the people in the landscapes. So we want to give them the final say. And last but not least, a big thanks to Fritz Klaver, who's here joining us from KPMG, who are core partners in delivering this report. We've got something really cool as we go along as well. Illustrator Hassa Cox. Hassa, show yourself if you can. Can you wave? There she is. Good. She'll be drawing the story of this webinar on her iPad. I've never seen this before. You can see the iPad there, I think, and you'll watch the picture developing as we go along. We'll share it at the end. Art meets finance, finance meets art. So there we go. That's just setting the scene. Enough from me. I'll hand over to Willem Ferreter, who's a tropical ecologist. Many of you know him, I'm sure. Founder of Commonland and CEO. Previously executive director of IUCN Netherlands. He leads the business and ecosystems thematic for IUCN still. Executive fellow of the Rotterdam School of Management. Many other things is Willem. But if you go on his LinkedIn page, he says that he is dreaming of a regenerative economy and culture. And I think he's infected a lot of us with his dream, if that's an appropriate term in a world of pandemic. Willem, infect the rest of us, please. Willem will give us an introduction to the concept of four returns. Over to you.
Yes, thank you very much, Paul. Maybe the next slide, Flor. Basically, I started a long time ago in this world of ecology when I was a kid, and started studying biology, and always asked my father and other people, how is it possible that people are destroying nature, and what is the business model behind that? That when I studied ecology, I didn't understand it. And when becoming an entrepreneur in tourism later, living from natural areas, and then also joining the conservation world, I saw how tough and difficult it was to conserve large areas, not only because of finding the money, the grants money or the subsidies or whatever, but also finding the right people and finding the right understanding of what ecosystems were and are. And when I left my last job and started with thinking about Commonland, basically I brought it down to a simple language tool, because we need to create bridges and language tools and bridges to bring everyone on board of this very important topic. And I'm sure some of you already have seen the documentary of David Attenborough, and I'm sure that you will know that this is the challenge of this century, together with the climate challenge. And basically, you can summarize the current economic model as maximizing return on investment per hectare. And that always leads to degradation if you put a very short time frame on it. And that's what's happening everywhere in the world. And you get these kind of pictures in China or in Borneo, but you can see them everywhere in each country all over the world. Next slide, please. So what to do about it? And lots of people and organizations and great people are working on this for some of them for decades. Especially conservation organizations, but also farmers and foresters, and you name them. But there are only a few large-scale projects that are increasingly becoming successful. One of them is the Loess Plateau in China, where they started in 1995. They started to reforest that area after a large-scale degradation of centuries, actually. And this is increasingly going better and better. They make a lot of mistakes, like everywhere, because this is a tough topic with two very difficult and dynamic factors: ecology, nature, and people. So how to bring those two together and create a kind of a model that everyone understands? That was basically my dream in 2012. Next slide, please. And what we did is, after a lot of interviews with farmers and investors in many countries, also with conservation organizations, we brought it basically back. This maximization of return on investment per hectare, especially the two words per hectare. If you add those two words, you get degradation or a degradation economy. What we did is we wanted to create a system change, a practical system change, by using different wording and KPIs and everything underneath to make it happen. But we first went to the countryside and to those areas where you see the degradation, in the field. And we realized that there were actually 4 losses that you were finding in those places. A loss of purpose and hope, because people who are living in those degraded places wanted to leave. Migration actually started there. A loss of employment and security, environmental security, but also, you know, security in general. People lost their jobs because the economic activities of smallholders and so on were going down. And of course, the core issue was here a loss of biodiversity that resulted in a loss of fertile soils, aquifers going down the drain, so water problems, etc., etc. And at the end, you find a loss of economic activity for a lot of people, and that led to a loss of financial capital for those people who actually needed to leave. So environmental degradation is one of the causes of this huge migration stream to urban areas. We have more people in cities now than in the countryside. What I did is I turned that around and I used the word, specifically used the word return, because farmers recognize the word return. Investors, of course, think and dream about return and risks. But also normal people, like, you know, urban people understand what return means. And ecologists, especially ecologists working in the field of ecological restoration, understand this very well. And I split it up in 4 returns. We need to bring back, if you want to restore an area, first, the return of hope and inspiration. And you can put the KPIs, key performance indicators, under that. We need to bring back jobs, social capital, as well as human capital and you know, education, all those conditions that helps people to come back to the countryside. Of course, we need to return and bring back the natural capital, the biodiversity. So we need to think in ecosystems and understand how ecosystems work and do the right things from an ecosystem perspective. And that will give sustainable financial capital, that will create new business cases that are innovative and restore the ecosystem. Next slide, please. But to do that well, and to move from, let's say, bad land management to ecosystem restoration, so regenerative land management, and these slides will be handed out later, so don't worry about it. You can of course take a photo shoot of it. But to do that well, next slide, please. We need to think in zoning, and zoning is a specific thing that landowners and ecologists understand very well. But for people who are living in cities and financial people, it is, but also engineers, it is quite often more difficult to understand, because what do we mean with zoning? Zoning means that we need to create a sense of place for ourselves. We need to understand how a landscape or an ecosystem works. That means we need to think big. We should not think in projects and small areas of 10,000 hectares, let's say 10,000 football fields. No, we need to think in 100,000 football fields. Size is important here, because then ecology will work for you. And then we need to understand that in each of those areas, we need to identify the natural zone. Where should nature be, dominant? Where should we restore and conserve the biodiversity? Where is the zone where we have economic activity, urban areas and infrastructure? And what is the in-between zone that quite often is absent in the world? We call that the combined zone. That is the place where you have regenerative agriculture, where you restore biodiversity and also restore and bring back the productivity. Could be agriculture, could be forestry, could be anything. So these 3 zones deliver those 4 returns. And of course, then the next thing is time. We need to, these things take time. And we decided to just use 20 years minimum and have no discussion about less time, because you cannot restore ecosystems just in a few years. We need to build and we need to make sure that we have the time to do it. So 4 returns are delivered by a 3-zone approach, a sense of place within a time frame of minimum 20 years. Thank you. Next slide, please. And and we tested that since we started Commonland in 2013. We tested that in 4 countries, in Spain, Australia, South Africa, the Netherlands, and we are now also entering other places like India and Haiti. And I saw someone of Haiti is joining us as well, so welcome, great to see you here. But it's important, if you test this, that you take the time and build landscape partnership to really understand how this is working. And so far now in Spain, we've set up companies, we have identified the zones, we have set up a landscape partnership called Alvalal. Great that Astrid is here. And more than 300 people, farmers, are now joining this initiative. And we identify together with them the zoning, and are now step by step identify the right projects within this huge place. I mean, this is 1 million hectares. This is the size of Lebanon, to work on this for the decades to come. And I think this is the first. This is maybe a nice bridge to Jasper. Thank you very much.
Thanks very much, Willem. And don't underestimate the amount of thinking and value that's gone into taking a very complex set of processes and crunching them down to very simple steps. Jasper is going to take us through the report and show us how that actually plays out on the landscape and in numbers. Jasper is the landscape finance expert for Commonland. As I said, he's a financial strategist who comes from ING Ventures previously and the Dutch Central Bank, and he's realizing his aim is to realize innovative business models that connect humans to nature. I think we're definitely doing that. Jasper, over to you to explain the report.
Yes, thanks, Paul. Hello, everyone. Just before, maybe next slide, sorry. Just before talking about our preliminary valuation method, maybe good to briefly talk about what is value. Value is something that's difficult to grasp and has some subjective elements to it. What has value for one does not have the same value for the other. It's also not the same as price most of the time. For instance, I think we all discovered the value of nature in the last couple of months, especially after the COVID outbreak. And we usually do not directly pay for a walk in the forest. So what is value? Maybe, perhaps we can say it's, something which has value is something that we want to protect. So then the next question, how do you measure it then? When I was a financial advisor on mergers and acquisitions in the first part of my career, I made a large number of valuation assessments of companies and business projects. And the book depicted here, called Valuation, and written by a couple of McKinsey employees, actually formed the basis of my perspective on value at the time, and was also my Bible for those valuation assessments. And I suppose it was for many other people in the financial and business world. And that book actually has the following perspective on value. Value is based on the present value of future cash flows flowing to the equity and debt holders of a firm or a business project. So it's actually based on shareholder value, not taking into account the value for other stakeholders. So it turns out when I was making all these valuation assessments, I was not really understanding what value is, because my perspective on value was incomplete. And I think that was the case for many other people in the financial and business world. So what was missing? What was missing is actually all the direct and indirect impacts on value for all stakeholders of a firm or a business project. Value is based on the long-term value for all stakeholders, thus for society. This is why I was happy to find an article published this summer, written by the authors of my old valuation Bible, saying that their former perspective on value was incomplete. And that actually, when you value a business, the long-term value for all stakeholders, thus for society, should be taken into account. So how does this relate to our preliminary valuation method? This is actually what we aim to do with this method. Calculate the long-term societal value of a business project or business projects, in this case, landscape restoration. And why is that important? It's important as currently one of the main obstacles standing in the way of restoring landscapes worldwide is the inability to calculate the real value of landscape restoration initiatives. Since you can't manage what you can't measure. Our ultimate goal is to develop a standardized practical method to measure long-term societal value for these kind of initiatives. With this method, we try to build a bridge between the current economic system based on shareholder value and short-termism on the one side, and a sustainable future based on long-term societal value creation. In our method, we incorporated the value of financial, social, natural, and financial and inspirational returns. Next slide, please. For our preliminary method, we used Commonland's 4 returns framework as a starting point, whereby restoration delivers 4 returns. Return of inspiration, social capital, natural capital, and financial capital. The 4 returns have been translated into 9 different impacts for different local stakeholders, including government, financial investors, and farmers. 6 of those impacts lead to a return based on related expected cash flows for one or more of the stakeholders. 3 of those impacts lead to lower risk due to lower volatility in the cash flows for one or more of those stakeholders. In turn, leading to a lower required return or a lower discount rate. For each of the 6 impacts that lead to a return, we forecasted the related cash flows year by year for a period of 20 years. Those cash flows are based on the difference between intervention and business as usual, no intervention. Next slide, please. We tested our preliminary method based on data of the Spanish landscape Altiplano Estepario in southern Spain. It should be noted that the outcomes for Spain are very case specific and very much dependent on the local landscape, local climate, business cases, etc. It should also be taken into account that for this preliminary method only the monetizable value of tangible cash flows related to the different returns have been taken into account. However, there is also a significant value, additional value to natural, social, and inspirational returns, which cannot or is sometimes difficult to translate into a tangible cash flow in the future. That said, based on our preliminary method, the total value for all stakeholders in the Spanish landscape is estimated to be between 100 and 500 million US dollars. These outcomes also show that it's possible for all stakeholders in a landscape to generate positive, stable, long-term returns. Next slide, please. So with this preliminary method, we have already showed for one case that it's possible to create societal value, long-term value for all stakeholders at the same time. We see this as a first step towards a comprehensive and standardized practical method to measure the long-term value of these kind of initiatives. We believe that it's essential for public and private parties to have a solid and practical tooling to measure this long-term value. This is needed to create a common vision and language on value, risk, and returns required to drive collective action. I hereby invite all of you to continue this dialogue together and to jointly further develop this valuation tooling to support restoring the fast degraded areas around the world. If you're interested, please let us know during this webinar already in the chat box. If you're interested to join us on this mission, or otherwise by email as a reply to the mailings you have received for this webinar. Thank you. Back to you, Paul.
Thanks very much, Jasper. And I see that we've got a flood of people, names. You can see where everyone's coming from, and quite a few questions starting to flow through. So please add your questions. This is great to see. First, though, I want to go to our two observers, commentators, Charly Kleissner and Celine van Asselt. Charly, you first. You know a little bit about business and finance. I mean, you were the engineering director for Next with Steve Jobs many years ago. You've made a little bit of money out of that. You've put it into the Toniic Institute, which you created, and then with a whole lot of other investors, you're looking to find investments for 100% sustainability, and you've been doing this for much longer than just about anyone else. Does this make sense, and is it radical enough? What do you think?
Well, thank you, Willem and Paul, for inviting me to this special event, and thanks to all the organizers for putting this together, and a special thanks to everybody who called in. I'm deeply, deeply honored to be here with you today. In my remarks, I will answer Paul's question of is this radical enough by explaining what I think is wrong with the current economic and financial system, why the deep impact economy is a viable alternative to business as usual, and what Commonland has to do with all of that. So what's wrong with the current economic system? Well, in one phrase, maximizing profits at all costs. And Willem already mentioned that in his introductory remarks. The system does not internalize or include positive social and or environmental impact. Investors only care about maximizing their profits, and therefore the financial system is designed to make the rich richer and the poor poorer by funneling all the profits to the investors and by pushing all the environmental and social costs to the commons, which is an absolute deadly design flaw. Economists call this phenomenon externalities and pretend as if the invisible hand of the markets would fix this. Well, it does not. This design flaw has now resulted in a multi-systemic crisis, and COVID-19 is an expression of this crisis, not the root cause. And if we don't fix the root causes, then the next pandemic will predictably strike. And negative consequences of climate change will accelerate, not decelerate, and inequality and social injustice will increase, not decrease. Well, there's an alternative to the current economic system, and I call it the deep impact economy. So what is the deep impact economy? Well, it's systemic in nature and is practiced with a deep level of awareness and consciousness that takes a non-human centric approach. And that was inspired by the Norwegian R.N.A. Nace, who coined the term deep ecology. And one of the fundamental characteristics of that approach is that it is non-anthropocentric, where humans are part of the system and not outside of it. While deep impact is similar, it is a view of life that does not only come from the brain or the heart, but from the soul. So deep impact is about appropriate financial returns versus so-called market rate returns, which define the old system. The new system is transparent and open as opposed to proprietary and closed. And it is about resiliency, regeneration, circularity, and regionality. An economy that is built around these principles is called a deep impact economy. So now allow me to go to my third and last point. What does that have to do with Commonland? Well, as we have heard, Commonland is all about holistic returns, the blend of 4 returns, including inspiration, a sense of purpose, social justice, and community health and well-being. This type of return is not yet valued by the old economic system. It is not internalized into the old economic system. It is considered an externality. Therefore, it is quite difficult to attract investments, as we don't really know what market rate returns are for inspiring disadvantaged communities and for providing a sense of purpose for thousands of farmers and other social entrepreneurs that otherwise would not have a job. Since the new system, which we call deep economy, has not fully emerged yet, it is important, however, that we make our arguments in the language of the old dying system, which Commonland and its partner KPMG have successfully done. This is as important as it is to continue to co-create the new system, where values like human well-being will be fully internalized. And this is the answer to Paul's question. We need to do both, improving the old system while we co-create the new system. Willem and his team are true visionaries who inspire all of us to go on the new path, to co-create the future we deserve. The good news is that we are not the only ones going on this path. Deep impact is emerging. It is not orchestrated, not controlled. We all make our contribution to this in gratitude, congratulations to Willem, his team, and KPMG for leading the way. Thank you.
Well, thanks, Charlie. So we've been running the world with Newtonian physics. We now need to shift to quantum mechanics, but that's going to take a while. But this is the pathway. Celine van Asselt, you have been a long-term supporter of Commonland. You're now Finance and Risk Officer of APG Asset Management, one of the biggest pension funds and asset managers on the planet. You're part of the Board of Management of the International Centre for Pension Management. So this is where most of the world's money resides. Do you see it's possible to get that money down into landscapes? Are we anywhere near the quality and scale of ideas and assets in terms of landscapes that the pension funds would be willing to invest in? Over to you.
Thank you, Paul. And I'm delighted to be part of this panel and to be able to join you. So good morning, good afternoon, good evening, everybody. And thanks a lot to Commonland and also KPMG for making this possible and having the launch of this, indeed, very inspiring new work. And to cut the answer short, yes, I'm sure long-term investors will be able to use this. What long-term investors very much like is standards. What they also like is long-term, 20 years. That's now we're talking, that's great. What is new, of course, to the investment world is the zones, the 3 zones, as Willem explained. So that's something that needs to be implemented, but thinking about more than only financial returns and thinking about the long term, that's certainly applicable. And maybe to give an example, it was exactly 1 year ago where I joined a conference. At that time, we could still do that. It was a non-digital one. This was a conference with ICPM, the International Center for Pension Management. So we had representations of 40 large pension funds all over the world. And when we talk about large and mega deals, whatever, I'd like to talk about people. So millions of people we're talking about, of their pensions, long-term pensions. And all of these large pension funds invest money for millions of people. And we had a 2-hour session where we explained about the long-term investing in sustainable development goals. So this conference, 40 large pension funds, and talking about sustainable development goals. On the one hand, we had a very practical example of a framework to invest in. Sustainable development goals is the Sustainable Development Investments Framework. And on the other hand, we had a best practice. This was presented by Commonland, and it was, Commonland gave a sneak preview on the monetization, you could say. So it gave insight in inspirational return, social return, ecological return, and also, of course, the financial return. And the discussion that we had in this group of people, the discussion that resulted after that, was the best rated discussion of the whole conference. So it means that this is a big thing for large investors. And I think what we are talking about is about a transition. It's not something we can do from one day to the other, but the transition is certainly there and it's visible. And this standard will certainly help and accelerate the transition. So I'm very grateful for this new methodology and looking forward to help implement this new way of thinking. And indeed, from my position, I do this from the transition from within the company. So how to say, to change from within with volume. So scale up. Thank you, Charlie. Thank you, Paul. I'm sorry.
Thanks, Celine. So that's good news, isn't it? That the investment world wants this to happen, is getting their head around it, around this new quantum mechanics, the four returns. How do we actually make this work? Can I throw a question then? So it's now time for questions and answers. Let's please keep on adding your questions to the Q&A box. Thank you very much for the ones that have already come in. We're going to lose Charlie fairly soon, so let me just throw a question to Charlie. Charlie, how do stakeholders and shareholders use this revealed estimate of value? How do businesses actually put this on their balance sheets and show the multiple values that come out of landscapes, not just the economic value? Any thoughts there, guidance?
Yeah, thank you, Paul, for that question. I think that the old investment world of private equity and venture capital is not the right investment model for long-term sustainable value, right? Because venture capital and private equity were invented for the chip industry, for huge exits based on Moore's Law. And the impact, as Willem pointed out, is about 20-year impact, which is incompatible with that type of model. And it's also incompatible with all the stakeholders that somebody mentioned in the Q&A side, that many people benefit from maintaining natural resources, not just the people, the farmers living there. I believe that actually brings up an opportunity for combining modern technology like tokenization of impact with the new economy, because tokenization of impact, meaning making it digital and then being able to include all the stakeholders with the tokens that are generated by that new economy, is a new way of dealing with sharing in the upside and the downside, and including all the beneficiaries. I'm quite bullish about that, and have modern technology be in service of humanity and the planet as one small contribution. Quick example for that, if we put impact events on the blockchain, for instance, then you can actually monetize them, and it cannot be faked, and you can put a whole equity layer on top of that. If we could put the 4 returns that Willem and the KPMG team have pioneered on into a tokenization world, then that might be a step to do that. Thanks.
Wow, that's a big picture, and a sort of impact currency on the blockchain. And that question came from Nicole Pasrica. I hope I've got your name correct. Thank you. Let's shift to a very practical question, and this is to Jasper, and this comes from Brenda Poot from RVO. Private investors in the Spanish landscape earn positive returns. What are the positive returns here, and is the cause of these just the returns from increased yield for farmers, or are there any other types of returns that we're talking about? Jasper.
Yes, thanks, Paul. The returns that are included for private investors are actually based on or for a large part based on a commodity trading credit that we assume that they provide to the trading companies, and they receive interest payments on that credit, and that's the largest part of the value they create. So that's not linked to the yield of the farmers, because it's a fixed percentage on the loan.
Let's shift then. Thank you, Jasper. Let's shift to Willem. A question about the system. This comes from Carolyn van Linders with RVO as well. So this is a valuation method tested in one landscape. Are you testing this in the other Commonland landscapes, Australia, South Africa, Netherlands? And if not, why not? But also, there's now been an inventory of landscape programs across the world done by the 1,000 Landscapes Initiative. Is this sort of methodology possible for other landscapes also? Willem.
Yes, thank you, Paul, and thank you, Caroline, for these questions. Yeah, we started, first of all, when we started Commonland, we wanted to build the practice in, on the countryside, in the field. And so at a certain moment, we decided to test this financial approach with the support of Jasper and the KPMG, of course. And we started with Spain, but we will definitely work now on a toolkit, as Jasper explained, that we can use in multiple landscapes. That's the whole idea. We want to move to a kind of standardization. If we want to create a restoration industry that is positive for the planet and for people, instead of doing less harm, that is basically the sustainable. Sustainability is now about doing less harm. You could say doing less bad. Then we need to create a kind of standard, and this takes time. So answer to your first question, yes, we need to do this on the other landscapes as well, and we are working on it. Jasper is now starting to do this in South Africa as well. And the next step is, yes, we would love to have other partners, and we are partner of the 1,000 landscape partnerships, together with Paul and many others, Rainforest Alliance and Eco Ag Partners, and many others. We would love to see if this will work for every landscape worldwide. And I'm pretty sure that it can work. And of course, there are questions about KPIs. You have different KPIs, but there is a general toolkit and a general KPI setting that we are developing. Thanks. Over to you, Paul.
Thanks. I'm just trying to unmute myself, Will. Another question from Martin Guillaume of Green Practice. How did you select, and this is for Jasper, I suspect that Willem add to it as well. How did you select what combination of actions were needed for that location? And particularly, how did you ensure that they're going to be future-proof as climate change hits? How can we be sure that those activities that we're investing in will still be viable in a few years' time.
Yeah, Willem, do you want to answer this question?
Yeah, I can take the ecological question. Yes, we are like in Spain, but also in other countries, together with farmers and local experts, we of course look what are the conditions in the future. You know, in Spain we will see, because this is southern Spain, we will probably see more droughts and more extreme weather events. So what does that mean for the current, the normal vegetation, holm oak? Do we need to move towards planting trees that are more from the Atlas Moroccan side? And we already, the farmers are already planting pistachios in between the almond trees. So we want to build a robust agroforestry system that will be much more resilient to climate change and droughts. And at the end, we are also doing a lot of water work. So we create new, you could say, new aquifers because we need to refill the aquifers and hydrate the landscape again. So yes, we very much look into these things because we think in decades instead of years, and we do not think in projects. We think in large ecosystems, so in acupunctural settings, you could say.
And that's what's so powerful about the landscape approach. It lets you do that. Jasper, anything to add?
Yeah, I think that Willem already said it. The last part of the question, if I remember correctly, was what are viable business models which are resilient? And let's say the business models that we start in those landscapes with the landscapes partners are based on regenerative, sustainable business models, which are in their core more resilient than practices that have been done before. So when there are agricultural practices, they are more resilient to extreme weather events and droughts and heavy rainfall than, let's say, conventional business models. So yeah, I think that gives an answer to that question, but let's check if answer.
Very good, very good. And let me ask the final question. I'm sorry, we're not going to get to everyone's questions, but we will come back to you and try and answer all of the questions as we report back on the workshop. This is a question to Celine, perhaps. It's from Willem Lagerweg. I'm sure I've pronounced that wrongly. Do you involve central banks in further development of the method? And what would be the role of the central banks in taking this sort of methodology forward and outwards? And Jasper, you feel free to add as well.
Thank you so much for this question. In the Netherlands, it's possibly the other way around, where the central bank is ahead and really is keen to climate risk, including climate risk into banks and pension funds risk analysis. So we team up with central banks, and this is, I think it was, I don't remember exactly, I think 2 years ago maybe, where indeed the central bank of Holland had the Dutch central bank had a seminar with all central banks, with their investment committees, where we discussed the climate risk related to this topic, I would say, approach, and where other central banks were inspired and involved to take this up on their agenda. So I would really say we team up. And this is not only true for central banks, but I would say for everybody, because we're in this together. So it's governments, it's farmers, it's long-term investors, it's central banks. We really have to team up in this together. So yes, I would say they're very much involved, but it will depend on the country and of course the culture in the region. So it's not a secret that the investment world is traditional. I think Charlie pointed that out, but there is a change. So let's pick up on that change and make sure that transition is there. And the same would go to really partner. The interconnectedness is there, but it's still leading leaders, leading people who do that. So it's not the entire industry, I would say, but I really see a change compared to a couple of years ago, whereby today we see this transition is ongoing and really cannot be stopped, I would say. So including the central banks, yes.
Wow, that's very good news that the central banks are driving this as much as the landscapes. I'm so sorry we've run out of time for any more questions, but thank you for your questions. We will get back to them. I want to leave the last word to the landscape. So Astrid Vargas, if I can introduce her, is a founding member of Alvalal, the cooperative company that's leading this work across the 1 million hectares of the Altiplano landscape in Spain. She's now making a film on the landscape, but Astrid, does this make any sense for you? Is this going in the right direction? What advice do you have for us all? And are you there? While we're finding Astrid, maybe we can flick over to the iPad story that has been slowly drawn up of this whole workshop. There you go.
Oh, I don't know if you can hear me.
Hassa, do you want to explain it to us?
This is
Oh, is
Astrid.
that Astrid?
I hear
Is it
Astrid.
Yes.
Astrid, wonderful.
Hey.
Hassa, I'm very sorry. We'll come back to you in a second.
Right.
Astrid, over to you.
Is this okay?
You're loud and clear.
Hi. Thank you so much for having me with you, and I'm delighted to speak on behalf of Commonland, which is a big landscape with very powerful, beautiful, lovely people fighting for the same change, a change in mindset. And I think if there's anything that it can really, really change people's hearts and minds is storytelling. And that's what we've been trying to do in Alvalal over the past few years, is to tell the story. What's happening there? They're real people with real lives like you and me, but they're really down to earth, very authentic. So I don't know if it's possible to share a 1-minute little video that summarizes this, because I think that this kind of documents, very short, very small, pointed, showing the people's souls and the people's hearts in these landscapes are very useful in these other financial realms and other realms that inhabit in very different worlds. So what we're trying to do is to bring a little pill, a little dart of what's happening in the countryside and how this return on inspiration can fuel so much energy. So I don't know, Paul, if I could send you a link and we watch a 1-minute little dart of this, or this is not.
We're running out of time, Astrid. We've got a minute left, but what we'll do is send it around to everyone.
Yes, I will do everyone,
that. Don't miss this one. I think you can see the energy that's coming from the landscape.
Thank you.
From Astrid.
What I would like to say is that what I'm gonna send is for you to use for your purposes if you see any value in doing so. So it's material that we've created for everybody to share and use.
Good.
Thank you.
And let's go to the iPad story. It is all about telling stories. Hessa, that's what's coming together. We'll send this out also. Any quick reflections as you drew our story?
Well, what I try to do in the storyline visual is I started on the left-hand side with how it's now, with a transition into what we would like the future to look at, with a more deep impact in economy where the human is part of the system and not a part, and where we are looking at all three different zones and include all stakeholders, not just the shareholders, and really touch people's hearts. I think that's what I took away from this webinar.
Beautiful, thank you. And thank you all. Thank you to the speakers. Thank you to Commonland for the support that you've given to create all of this. Our purpose here has been to demonstrate that landscape programs can make a genuine quantifiable difference to people's lives, but much more than that, that they're the new quantum mechanics. They're a completely new way of thinking about value in our land, and it's what we need in a world where we have to rapidly get the global goals into place, as well as create resilience against pandemics and so much more. If we can turn the mic on, let's give the authors of this report a round of applause. Let's give all the speakers a round of applause, and thank you to the landscapes and you all. Please.
Thank you, Paul, for facilitation of this great seminar. Thank you very much, Paul.
Thank you, sir.